No jobs data at 8:30? Fine with me. No government? Even better. Markets ripping? We don't need jobs data, and we don't need the government. We just need this market going higher. We're going to talk about the catalyst today in absence of no jobs data. But you know what? Do you want stats on a government shutdown? I mean, who in the world could have stats on a government shutdown? One guess. Statman Duke coming on at 8:35. It's pre-market prep. Go Tigers.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Did I mention making new highs on a Friday? Well, that's what we did. We're up 8 handles, leaking a little bit at 67.75. The buck down 7 cents, 97.49. TLT a little perky here, a couple quiet days, but up 29 cents at 89.84. USO expands the bottom of the trading range, but we'll see if we can get back into it. Up 63 cents at 72.17. Gold still shiny, up 66 cents. That's a GLD at 355.45. SLV, where's there an offer? Up 71 cents at 43.24. Bitcoin cooling down a little bit, down $300 at 121,610. Dennis, no government, no jobs data. Do we even need to do a show today?
No, yes, we do need to do a show, and we don't need no stinking government jobs data. We know interest rates are going down anyways. So all of us do is going to give us maybe another buy the dip opportunity if it was a little bit hot and they were just bought the dip. I mean, that's what they do. Government shuts down, buy the dip, whatever. It's just full on algorithmic, retail driven. Every dip gets bought no matter what. That's just what's happening right now. That's the type of market we're in. Buy the dip has never worked better than it has this week. This was a buy the dip week here. And yes, Tigers, we were watching, covering it live on Stock Trader Network. I see lots of good Tiger gifts and pictures. And yes, Tigers beat the Cleveland Guardians there last night, advance to the second round of the playoffs. Or actually, I guess.
Well, you know what? Can I just throw another thing in here?
Card.
And then you're going to get mad at me. And you're going to say, don't say that. But you know what? It makes people in Ohio upset, too. I mean, is that an added bonus that people in Ohio?
Joel is Michigan versus Ohio, obviously Buckeyes and stuff. So he kind of actually loves that it was Cleveland too. All right, we won't pick on you Ohio people because they're all shutting down. Now
we have any Ohio people?
I
don't know if they have internet in Ohio.
There right now.
Do they have internet in Ohio yet? AOL dial-up?
Okay, stop picking on Ohio. Jim McCurry's in the chat right now. He tweeted at me too when the Cleveland won the last game there. So sorry, Jim. We still love you. Stop picking on Ohio. Okay, let's start picking on Apple. Because Jeffries is picking on Apple this morning. We're starting with downgrades because it's a big one and it happened about 15 minutes ago. Jeffries analyst Edison Lee downgrading Apple from hold to underperform with a price target of $205.16. Don't ask me why it came out to $205.16, but that is the new price target, lowering it from $205.82. So it's kind of interesting that this goes down a bit. Okay, let's get into the meat of the note. Analyst comments, better demand for iPhone 17 partly due to a price cut on the base model is already in the price. That has led to excessive expectations on 18 Fold, they're calling it, and the replacement cycle. We raise our estimates on iPhone unit growth, but our muted outlook for 2026-2027 is driven by a $100 price hike for iPhone 18, cautious outlook for the 18 Fold, and we estimate the current stock price factors in greater than 2 times of that every year. We're downgrading it to underperform. So Apple trading down here. You can see the sell-off when the note just broke. These analysts, love them or hate them. You can't argue with the price action there. That's not a chart that did that. That is the analyst note that did that. So we know information builds the charts. That's what we talk about in STN all the time. You can look at charts, and obviously, charts, we like to know where they're going. They're a very useful tool. But information drives price. And the information on Apple this morning is a downgrade, and it hasn't had a downgrade in a while.
Let's see what happens at yesterday's low. I mean, it did go through it in the pre-market, right? And went under 253.50. Yesterday's low was 254.15. So, I mean, that's your first look. After that, your next daily low comes in at 253.11. But maybe this is like really, I'm really like drawing things in here. But didn't Jeffries like downgrade Oklo and like say you have to absolutely get out of it and it's a sell? And I'm not saying the exact same thing is going to happen.
You're a little bit too bearish.
Yes. Yeah. I mean,
Yeah.
it's a bull call. You're getting some price action in here.
Yeah.
If you use that opportunity to like say, hey, I want to get in at 110 in Oklo. If you use the opportunity, I don't know who's looking to get in Apple here. I don't, the technicals, it's had a big run. It's actually still running off the Tim Cook, Trump little makeup and everything. So that's what I would do. I would just, maybe this could just be a buying opportunity here.
Well, it's a this market, Joel. I mean, why fight the trend? You know what the trend is? It's not. It's the trend is buy the dip. That's the ultimate trend. Buy the dip. It's worked for 100 years. It's worked eternally on Apple. I've tried to be bearish Apple. I've tried to be bearish the market. I'm even conservative on my shorts for the last week because I'm like, I can see what's happening. We get the government shutdown. What do we say? They're probably going to buy the dip. Of course they buy the dip. They can't even wait an hour before buying the dip. So, I mean, if you're coming in and selling the dip, you're doing it backwards. Now, I'm not saying Apple can't go down to 251. The note's just hot out the press. CNBC probably hasn't even mentioned it here yet. So we're pretty new on this. But, I do think that this probably isn't the start of the new bear market for Apple. So, I mean, if we're just going with the flow here, I mean, I'm with the analyst. I think it's ridiculously overvalued, Apple, but there's a million things ridiculously overvalued, and that doesn't make you money trading. What makes you money trading is going with the trend, and the trend is buy the dip. That's the trend.
What number, all-time closing high, and all-time high was made yesterday in Apple, but let's just go with the mark because we're a couple bucks away. So, folks, you long-term, short-term, medium-term, tick chart traders, 257.13, all-time closing high in Apple.
Continuing on our merry parade here, we're going to move away from ratings here for a second, though. We want to move to the news from last night, which was really moving the chips, was Applied Materials. I want to bring the Brentster in here for this news because Applied Materials got smacked last night. Now, again, buy the dip emerges. So if you're just blindly buying the dip on Applied Materials down at 211 last night, you're immediately rewarded with 8 points because the buy the dip trend works. What was this news here, Brentster? You were digging Applied Materials got hit, then LRCX, and KLA 10 Core, then ASML. What's up?
Filing last night from Applied Materials, company said the U.S. Department of Commerce's Bureau of Industry and Security issued a new rule that expands the list of companies subject to U.S. export restrictions. Applied Materials expects that the BIS affiliates rule will further restrict its abilities to export certain products and provide certain parts and specific China-based customers without a license. Q4, they are expecting an impact of about 110 million. For 2026, they expect net sales to be reduced by about 600 million. Keep in mind, Applied Materials sales for all of last year, 2024, were around 27 billion. So 600 million is a small portion. It's like 1%, 2% of their sales, something like that.
Wow. So tariffs, we're blaming tariffs here. Again, the tariff tantrum was back in March and April. This market, the honey badgerness, the resilience, the silver lining, whatever you want to call it, buys dips. So, my gosh, tariffs are going to impact Applied Materials. Nobody can see this coming. Algo, sell, Buttermouth, sell. And they sell it down $10 immediately on all that. They think it's pop back up. I mean, they're backwards. I mean, it's not sell the dip algos. It's buy the dip. I don't know. Who runs these algos? They lose a lot of money, man. It's not Citadel, I'll tell you that, because I can see Citadel and Virtue, they can just continue to print money. So it isn't them running these news algos. They were running the smarter ones. But there are some dumb people running some algos out there now. Very, very dumb traders running some algos. So overshot again. KLA 10 core. They didn't even say anything. Goes down $30 last night, Joel. $30. Bouncing. Of course it's bouncing. It's buy the dip mentality. Gets down to 11.10. Seller down there. ASML was down, I think, $20. It bounced back. It's only down 4. LRCX, which is Applied Materials' brother-in-law, very linked. It was down to like 142, back to 145.5. Man, people, it's just selling that dip. It's just not the way to print money. Not in this market.
What happened? Well, this is 2 days ago, and I should know this, but what happened to this thing on the first? It went from 204.74 to 217.74. I mean, what happened that day? I mean, that wasn't yesterday, 2 days ago. I don't know, but
I don't remember. I have a goldfish memory.
Okay,
it was something.
It was something. Well, what? Yeah. A stock going up, probably wasn't even like one of the top percentage gainers. This one is a little bit tougher because of that day. And you are through yesterday's. No, you're not. You're not even below yesterday's low. Give me a break. This is bad news. You did pierce it in the pre-market. You did spend some time under there, but let's just throw 218.73 out there. And that was a low from yesterday. Thursday's close, if you're looking to get back your mark, that's 217.74. And then after that, I'm wiping. You got to go to your short-term tick charts. Go to your charts. Don't go to your news. If we take out 217.74, I encourage you, go to your charts and look for something on the 5-minute, because there's nothing down there until that would be Wednesday's low at 203.61.
That's the Applied Material news. I want to go to news from last night. Again, USAR CEO on CNBC with Morgan Brennan. She says in the interview that they're talking with the Trump administration. Just mentioned that they had spoken with the Trump administration. Not who, didn't say she spoke with Trump directly. Just said that she had spoken with the Trump administration. Everybody automatically assuming government's going to take a position in USAR. Flying around the internet because they took a position in MP Materials already. They've taken a position in LAC. They've taken a position in Intel. So they inevitably are going to be taking a position in USAR. She did not say that. Nothing was said like that. But that is what is flying around social media now. Oh my gosh. USAR, which is USA Rare Earth. I mean, Trump does like companies that say USA in the name. So, I mean, it would be a potential target. But we have no confirmation of this whatsoever. Yesterday, the stock ripping higher too, ahead of the interview. And then on the interview, continues to rip higher. So it's trading up 15% this morning. If you want to know why, it's because this market, again, we've got more, just breaking here now, people talking about it. Yeah, CNBC report. So that's the same thing. Street Insider was just talking about it here too. But the 15% here this morning because she said something about talking to the Trump administration. That's enough to get everybody and every algorithm excited. I don't know. Like, these things just go nuts. I mean, this momentum market is picking up steam. It's like when a stock starts going, like we saw with the pharmaceutical stocks, Joel, the 2-day move was absolutely crazy.
Man.
I mean, it's hard to fight momentum. We get these 2-day moves that are violent sometimes. Like they get the big up 10%, then they go up another 10%. Just no messing around. So USAR, which is a stock making a new all-time high here right now, hard to short them. I don't want to be short.
I don't know what to get.
I think the momentum is a lot to do with. If I was in normalized markets, I was like, that's overdone. I'm going to short that. I would be that kind of trader. I'm like, no way, man. No way am I going to be shorting these stocks when they're making new all-time highs and breaking out around 10% because they go another 10% the next day. So you get short spooked. Shorts are spooked all over the place. That could be the name of the show. Shorts are spooked. They are. The government shuts down, stocks go up. Like shorts are totally spooked here. So I don't know what this means longer term. It means it's bubblicious, but I'll tell you, there's less speculation on the short side right now. A hell of a lot less.
Wait, what time did this person speak?
4:45.
Okay,
And then went to
4:40.
4:55. So about a 10-minute interview. You
What
can
was
see
it?
right then it blasted.
What was it previewed though?
Yes.
Oh.
Previewed it all day.
Oh.
They preview these interviews. So
So
I think there was also news yesterday too. I think there was
okay,
another
what was the
news headline
news?
yesterday. I can go look for you. Brentster's
Because it was
maybe
up.
dig too.
It went.
It was up big yesterday. Yeah.
Yeah, it
The
was
news
up big,
yesterday
was that the lady was
slow.
it was a lady, right? Young lady?
Yeah, it's a CEO. I don't know if there was actually. I'm trying to find it.
Really? There was no news yesterday, and the stock went from
Just
6.6
running ahead of that
million to
interview.
it
Well,
went from
MT, the whole sector was moving up yesterday, though, too, Joel.
Okay.
The
Back to
whole
my
sector
cage.
was moving yesterday. I don't know if there was company-specific moves.
I don't think so. I don't believe so.
Well, because it
Holy
only
crap,
it
man.
only went from 6.6 million shares traded on Wednesday to 24.6 million on Thursday. It only went from 1841 to 2271. I mean, that's the only reason I'm kind of mentioning it. It's just very interesting to me that had the big jump. So I guess the people that were anticipating saying something positive, you could say that that's a catalyst. But you know what? I do have some breaking news, and this is not investment advice. Spirit, the government is gonna take over Spirit Airlines, and they're gonna name it. They're gonna bring back U.S. Air. That's what they're gonna do.
Joel is starting rumors here again.
Yes,
folks.
U.S. Airways. Yes, why not? U.S. Air.
Yeah, why not?
Why not? Did you ever trade that stock, Dennis, or are you still in junior high?
U.S. Airways?
No. Yeah. No? You never traded that thing?
Don't give Trump ideas. You're giving ideas.
What if Trump
he's buying
wanted
good
that,
businesses
what
like
if he
Intel
wanted to invest
and
in
lithium.
our show? Oh man, no, you is Unity now. No, if the only thing I can say about USAR is if your target is 2607, forget about your target, man. Just let it ride. The government's getting involved. See what happens today. I mean, this thing hasn't even opened yet. Trading at the highs of the pre-market session. I have absolutely no idea where this thing is going.
You want to talk about stocks that have just got a lot of momentum here too, and we're on Momo Friday here. Let's talk Nebius, NBIS. We've been talking about this one in the STN room. We talked about the big contract that they got with Microsoft to put them on the map. That's why we said it's more of a. I said on Nebius that day, I'm like, I don't like chasing stocks, but if there was ever a time to chase, this is probably the stock. And the stock went from 82 to 100, and then consolidated in the 90s, and it's continued to go higher. The company is just firing on all cylinders here right now, but the analyst community is going absolutely berserk here on this stock. So yesterday, we get a rating from Seaport Global, NBIS, and they come out. I'm trying to find it here. They initiate coverage with a buy and a $540 price target on NBIS. Yes, not 140, 240, 340, 440. No, $540. That's their buy target. That was yesterday. So today, this morning, we got DA Davidson coming in, and they say, no rating, but they're giving commentary here, that we remain confident that Nebius is likely to sign another large-scale commitment from a hyperscaler or frontier AI lab customer. So they just got the big deal from Microsoft. They think another big deal is coming, and it could be more than $10 billion. Are they informed? I don't think so. I think they're just speculating. But they're saying they're going to get another huge contract. They just got one from Microsoft. Why not? So, I mean, if they get another huge contract, stock pops another $20. So, maybe more. So, keep that in mind when you're shorting these things that are nosebleed valuations. And again, we talked about this yesterday too when you were away, Joel. It's important to look forward, not backwards. Because if you're looking backwards at Nebius and you're seeing their $100 million in sales last quarter, you're thinking, what the hell is this stock doing trading at this kind of valuation? But it's not trading on that kind of valuation because you're not considering the contract from Microsoft that they have now signed. Now, that is over multiple years. But, you're looking at it and saying, oh, it's $31 billion. This thing's trading 114 times sales. No, it's not. There will be analysts out there. There's people in commentary saying this is a bubble. Nebius is trading 114 times sales. That's looking back. That price to sales looks back at the $100 million in sales last quarter. It doesn't look forward to the $17 billion contract that they just signed. So it's not trading at that anymore. It's trading a hell of a lot less than that. This is why always be forward looking and not backward looking. If they sign another big contract like D.A. Davidson is speculating this morning, all of a sudden this stock starts to look cheaper again. So I think NBIS dips to be bought. I don't know if it's going to $100, $540 like Seaport Global is, but I'll tell you, the stock is a hell of a lot cheaper on a valuation metric than your traditional metrics when they're looking backwards. They got to look forwards. Joel, you're on mute. Joel, we're going to ban you from mute. You don't need to mute. There's no reason to mute yourself. It's okay.
Yeah, okay, Dennis. And then if no, Dennis. Then if I take a drink of water,
what do you need a drink of water for all the time?
You say you're slurping. You'll go, you're slurping.
You need water every
Brent,
5 minutes?
Can you step in here and calm down?
The co-hosts of Pre-Market Prep have been put on timeout this morning, folks. We're going to just stare at my face here for a while. Maybe I'll put a stock chart up a little bit later. All right, Joel. Joel's done drinking water. He's allowed to come back. Dennis looks like he's happy.
I'm still in timeout. I'm still in timeout. They put me in timeout. They put me in the corner. Yeah.
Okay.
Don't put Denny in the corner.
Okay. So what do I need to do? What do I need to do first? Do I need to put my order in NBIS at $539.99? Or do I need
You'll
to
get executed if you do that. I'll tell you that.
Or do I need to put my Oracle order in at $999.99?
I like NBIS maybe. I like this NBIS still. I wish we get a dip. I should have bought the 90 dip, when I was telling everybody to buy the 90 dip, but I'm like, I can't buy everything that I'm pitching. I don't want every stock. So right now in this market, I'm just pitching everything. Everything's just going up.
I think we just got to look at the offerings on this stuff. And I say that and I'm like, well, that's going to be the level. Do you guys remember what the offering was in NBIS, what the level was? And it traded below it. It went up and down.
Do you remember it, Joel?
92. It was
92.
Yep. Boy, I wish I would have got some stock in 92. I mean, this was it. This was they jammed it. It was after. Then it hung out like, oh, those people buying the 92. They're like, I don't care. It goes down to 89. They're like, I don't care. This thing's going. And boom. So new alt 540. Do we know anybody at Seaport? I'm trying to think. Frank Longman used to be there. I don't think I know him.
Oh, really?
Yeah.
I actually literally just emailed Seaport like 2 minutes ago, right before I came on air.
Okay. Hopefully we'll get somebody back.
See if we can get
We're going to start digging more and get you more analysts off the press. We're going to start doing this more.
Yes.
This is why we're building this show. We're getting bigger. We got a lot of people who are interested in it. 1,700 viewers here right now. That's not bad too. Concurrence. We like that. NBIS. Back to this stock.
Oh, man.
If D.A. Davidson's right, they get a $10 billion contract. I wouldn't want to be short it. Why would they? They just got a big contract from Microsoft. It's not out of the realm of possibility there could be another big player, give them another big contract. I think it's a good point. I think it's good. I think NBIS buys on dips, although everything is right now.
Okay, I'm a little bit more bearish this one. Huh,
what do you got?
Is that word still in the dictionary? 129. That hit at 5:15 this morning. So I'll put a capital P on potential. That would be a target. So if 129 was your target, you may have missed it, but you'll probably get another, especially if it's going to 540. So holy mackerel. Is there a lot of analyst coverage on this stock? I'm just curious because
there's some. Redster, we could go to Tip Ranks, check that out.
Yeah.
Yeah, sure. Let me do that.
Because
you're gonna go dig.
Because you know what happens? It's like, oh, I got to start covering.
I don't think there's a lot. There's not a lot of people who, if they cover it, they're probably buys. There's not a lot of people who are sitting with neutrals and sells on NBIS. I'm going to say that right now. If you're sitting with a sell on NBIS, you're like, uh-oh. Yeah.
TipRank says that there are 7 analysts that cover NBIS. There's 2 hold ratings, and the rest are buys.
Yeah. There's going to be more analysts that are going to be starting coverage of this.
That's the reason I
Good thought, Joel.
I think the stock goes higher. I'm with you, DA Davidson. I don't know if I'm 540 Seaport, but I'm with you. I think NBIS is to be bought on dips. And again, markets you talk to those bears out there, they're going to say it's 100 times sales. Tell them they don't know what they're talking about because they just got a huge contract from Microsoft, and that is backward looking. Because you can quickly do the math. $31 billion market cap. It's got a freaking $17 billion contract. Even if it's over 5 years, that's not 100 times sales. So you got to not look at those traditional metrics that you just see pop up. You go to your thing and it's looking backwards. They'll say, we can't look forwards because we don't have that information for sure. Well, we kind of do. They signed the contract. This is why I keep saying, stop looking backwards. Stop looking at trailing PE, trailing price to sales. You got to look at projected out, because it doesn't include that contract. So when I bring up your analysis here, your whatever it is, and you're seeing 115 times sales, it's wrong, 100% wrong. It's backwards looking. It doesn't include that contract. They get another big contract, stock's going higher. If DA Davidson's right, stock's gonna be a lot higher.
Same conversation we had in NVIDIA a long time ago when you were talking about the
same exact conversation. And Dan Niles comes on CNBC. The genius that Dan Niles is, he is my favorite analyst. When he's the only one that I stop everything I'm doing when he's on CNBC and I listen to everything he has to say because he doesn't lead me astray too often. The guy's awesome. He's so underrated. We need to bring him on the show because I'm like a big fanboy. Anyways, he came on. This was at the beginning of 2024 and said, everybody's saying NVIDIA's 150 times earnings. It doesn't make any sense. This was when the stock was literally $15 on a split adjusted basis. No, sorry. This was the beginning of 2024. Stock was $40. And he came in and said, this is the biggest no-brainer. If you project it out looking forward, it's trading 24 times earnings. He was absolutely right because he was projecting forward and not backwards. And it wasn't 24 times earnings. It was like 12 times earnings then. He was being conservative. And they blew away those estimates. So all the people who are looking backwards at trailing PE get left in the dust. Trailing PE will leave you in the dust. Stop looking at it. Throw that metric in the garbage. Take trailing PE, crumple it up like this, waste paper basket, and throw it away. Never look at trailing PE when you're investing.
When are you going to rewrite the CFA manual?
I already did. I helped with level 3. I did, for real. I was involved with level 3. I helped with level 3 curriculum. So I'm already involved, but I haven't done much with the CFA Institute since I had kids. So I'm too busy. I was very involved with CFA Institute from 2010 to 2016. So yes, that's for real. I'm not make that up. I was involved with the editing of level 3 curriculum, the market structure stuff. Of course, the market structure stuff. Yeah. No, but I don't have time to write the whole course. Sorry.
Okay.
For real.
We're leaking. CFA
is not worthless, buddy. Sorry. It's worth something for sure. It's worth something.
We're leaking. We're leaking, Dennis. We're leaking. We're done. We're 14 handles off that.
Gosh, it's the start of the bear market. Well, we don't have to look farther. It's Apple, probably. Apple put a little damper. It's down 1%. It's a huge component. Here in Jeffrey's downgrade to sell today. Does it continue to go down? Who knows? You know what is leaking is GSRT. And we were talking about this one in STN. I'd bought a big position in it at 10:30, and I sold it all yesterday. And we gave the pitch in STN why I was selling it. And it's because it loses the floor. So these SPACs, it's like learning as you go. I'm not a huge SPAC trader, but I'm starting to learn quite a bit about them. So what happens is they're going to go to the vote, the merger. So you could get your 1025 back up till midnight last night. IB cut the deadline off. You can't get your cash back anymore. So it was going to lose the floor today. And we talked about this potentially losing the floor. Now, this is going to become NKLR if the vote passes. And I think there's going to be a rip, roar, and rally when that happens. But the vote's got to pass. They have to de-SPAC it and then do that. So it's probably towards the end of October that this is NKLR. So this is going to trade as GSRT right now with no floor. And nobody knows what the hell GSRT is. When it changes to nuclear, they'll be like, oh, this is cool. It's a new toy. But nobody's seeing this as NKLR yet. So I'm not saying to be the first one to buy this. I'd say the dust settles. Later this month, there's going to be an opportunity, a better opportunity to get in GSRT.
Oh, it's man, down at $1.28. Wow.
It's got crushed. That floor was falling. So we have the 10-minute segment from STN. I think I was going to have Brent clip it. in the Stock Trader Network room. If you're in that room, you were warned heavily that this stock floor was going to fall at 10.28. I know it's not worth $199 a month, but I just saved a lot of people a lot of money. So GSRT.
So you got something from IB? You got
Yeah. And yeah, that was my last, like, so you get the notice, and you had to elect by midnight last night to get the cash back if you wanted the cash back. So that's, the floor is gone. So that's why the stock is falling, because now you're going through. So now it's trading as it's like a stock. There's no more cash back floor. Like CEPT, which I've talked about for a lot in the STN room, and it's been moving up, is pre-deal. They don't have any deal announcements. So you can, you still have your 10, I think it's like 10.21. It moves up, it accumulates cash. They're still looking for a target. It's the Lutnick one, which is why we're in that one, because I feel like the Lutnicks are probably going to get a pretty sweet deal because they're the Lutnicks. That's why I'm in the CEPT. The reason I sold GSRT was, though, is because you had the floor and you lose the floor yesterday. I'm like, I don't know what happens when you lose the floor. I'm not saying it's going to go down, but I'm saying it can go down now. It couldn't go down before because you could elect to get your cash back up till midnight last night. Now it's lost the floor. And now people are like, oh, crap. It may go up higher eventually here. And when it becomes NKLR, it might go back up. But temporarily, this is GSRT with no floor. So I'm like, I like it better at the end of October when it's going to become, if it becomes NKLR, I like that better. So that's the story on NKLR.
Order execution question for you, Dennis.
Yes.
A lot of times you don't put you're like, oh, I'm going to go in the middle. I'm going to go on the offer. Was this like, give me a bid and slam the bid kind of thing? Or did you? There
was a million bids. You could have sold a bazillion shares of GSRT because it had the floor. So nobody's going to allow it to go below. Like if it went to 10.20, somebody could buy it, elect to sell, and make a free 7 cents. So it had the floor there. You get it? Like if you can elect to get cash back.
Yes.
It's never going to go down to 10 because I would buy all the 10, elect to sell, and get my 10.27 and make 27 free cents. But that's gone now. And I'm like, I don't like the floor. And we've got to give a shout out to a couple people in the STN room who were calling this. Noobs was in there calling this. And there was also, I forget who else was doing research. Brentster, you would know. Kirk was doing good research on this too. And Noobs even said, sometimes the floor falls out of these things before they rally. They said that's happened on Oklo. The floor fell out first because you get this gap between when the de-SPACing's happening. So that's what's important here. Anyways, now SPAC talk, because we got my man, Ryan Detrick, who's going to tell us what to do when you have a government shutdown. Let's roll that intro.
What's happening?
I have to give a shout out to Josh on that one. I mean, and we don't even get dinged by YouTube on it. So let me introduce my favorite person from the state of Ohio, Ryan Detrick, Chief Market Strategist at Carson Group. Ryan, how you doing today?
I'm good. I thought everybody loved Ryan Day. You beat him every year. I thought he was your favorite. They fly in the what did Portnoy fly over? Like keep Ryan Day. One of the practices with the.
So the government was shut down. I sold all my stocks. I went 100% cash because the government's shutting down. Ryan, did I make a mistake?
Yeah, probably. Let's see here. Let me share my screen. Give me one sec. I've got a bunch of slides, a bunch of cool stuff to share. How's everybody doing this morning? Though, you guys good? I'm finding this here. Everybody
we're super happy. We are.
We're happy.
Yeah, Tigers. How about?
That's true.
Are you a Guardians Indians fan or not?
Football.
I mean, I live in Cincinnati, so the Reds made it, but then they got smashed by the Dodgers. But the Reds, I think their payroll is like 118 million, and we got in over the 360 million payroll of the Mets. So that was our claim to fame. So take that to the Mets.
Wait, don't the Lions play the Cats this week?
Yeah, this 4:30. The Bengals don't have an offense or defense, so it shouldn't be much of a game. But anyway, we'll leave it there. But good luck. I'm not going, but yeah, it's I think a 4:30 game. So let's get into it. So again, thanks for having me back. I think it's about 6 weeks or so since last time I got to join. A lot's happened. It feels like the market goes up every day. We'll talk about it. But here's some some data, and I've updated this multiple times. Well, not updated. I've shared it multiple times the last several years, and it was surprising to me because we've talked about a lot of government shutdowns the last couple of years. We've averted all of them. The last one was until late 2018, 2019, as you can see there. Just remember, that was the record. Market gained over 10%. Now, for those of us who remember our history books, that was little to do with the government shutdown. That's because we had the Fed was hawkish, and then in early 2019, the Fed became dovish, and the market rallied like crazy. Had virtually nothing to do with shutdown. In 2013, I mean, a lot of us were around then. That was a really strong bull market. I don't remember talking about the government shutdown much in 2013, but sure enough, did well. And as everyone can see, on average, you're up during these. They're usually pretty quick. But I think what's fascinating is once they're over, let me make sure I read it correctly. A year later, you're up almost 13% on average, higher. What is it, about 86% of the time? Yeah, probably, maybe some randomness to it. Not going to ignore that. But the reality is, do not get too worked up over government shutdowns, and they usually don't last that long. This is the first one, though. We have the betting markets. Everybody says, oh, the government shutdown supposed to last 9 days, 10 days, 11 days. We're following that a little bit, but I think the reality is this gets the headlines, gets the clicks. We're not overly worried with it. There's a chart I've shared a lot right there, and it's been popular. But I think it's neat what just happened to third quarter, because third quarter is usually not that strong. Well, this year just kind of laughed at that. 23 all-time highs in the third quarter. I think it's 8 all-time highs in September, one of the most we've ever seen. But you can see here, guys, tied the most new highs for any quarter going back to the first quarter of 1998. I mean, honestly, that's kind of crazy. It is what it is, right? But again, it's one of those, it is what it is. Just to put how unreal that strength was. Now, to put some more context around it, well, I'll get there. I guess I'm going to get this. We have a birthday coming up. The bull market's almost 3 years old. I think it's what is today's date? Yeah, almost next week. 2 weeks or so.
You got the date of the start of the bull market. I love that.
Exactly. Yeah. So, it's actually right in front of me. Good point. Thanks for saving me there, Dennis. Yeah, you're right. It's right in front of me. October 12th. There's the answer. I knew it was somewhere around there. Anyway, but just remember, it's going to turn 3. But just remember also, I've shared this a lot and shared it with you guys the last couple of years. This is still a young bull market. Now, maybe we're a little more maturing once we get to that third year. But you can see the average bull market lasts, over 5 years. And the last couple that made it to this point, got to this point, you can see there, they all lasted at least 5 years on average, right? So again, just some things to think about, or at least 5 years, 8 years on average. And I think this shows it a little bit better. Last 50 years, all the bull markets that made it to this point where this one is right now, they didn't just end right away, right? They lasted many, many more years. This is just big picture stuff. I know we've got some short-term traders on here. I think it's important to know the big-term structure of where we are. And I've been saying for a while, it's a secular bull market. Still, that is absolutely the case. And then one of the reasons we came into this year looking for about 12 to 15% on the S&P 500 after back-to-back 20% years. Obviously, we're right there now. We never cut that. We were down 14% for the year on April 8th. Trust me, I'm looking way up there and say, wow, our target's a long way away. But we still believe we're going to come back, and clearly we have. But we also knew, the first half of a post-election year is usually choppy. The third year of bull market, as I'm sharing here, is not always that great. You can see it's the weakest. Well, that's kind of played out, honestly. Things were very choppy, we know, the first half of this year with that near bear market. But as you get older, it is what it is. You get some better returns. Now, this is a neat one. Momentum is real. S&P's up 5 months in a row. And I saw some cool charts circling. I mean, if you say what's one of my worries right now, we are up 5 months in a row. Okay, I mean, you can't go up every month. But put the call ratios, getting near some of the lowest levels we've seen in a while that have marked some near-term tops. So listen, after a 5-month rally, little optimism. I know the government shut down. I'm not worried about that. Maybe that caused the spark to create some just indecision in the market. But just know this. When you have a 5-month win streak, a year later, up 29 out of 31 times. Literally a year ago right now, I probably come with you guys and talked about this very thing, saying, hey, this has been higher. What I guess would be 28 out of 30 times a year later. And we just gained like 16% the past year after that last 5-month win streak. So just, again, some big picture things. Momentum is real. I'd put this clearly in the bucket for the bulls. Small caps have joined the party, right? Making new highs in the Russell 2. Interestingly, 600 has not. Well, that's because of the components, right? The 600 has a little higher quality companies making earnings. What's rallied the most kind of the last several months is some of those lower quality companies that are very impacted by likely more Fed rate cuts. But again, when you go a long time without a new high on the Russell 2, like we just went almost 4 years, you can see the numbers there, a year later, higher, 7 out of 10 times with some pretty good returns. I mean, reality is if you can avoid a recession, we're still in that camp. I'll get there. It's still fairly positive to see that. I've never heard Uptober, but I've seen it the last 2 days. I guess we're calling October Uptober, which is probably a contrarian indicator right by itself. October's been down the last 2 years, right? We gained 20% the last 2 years. October was lower, so something to think about there. October's not been down 3 years in a row since the late 1970s. I mean, that's like when I was born, right? So it's been a while since down 3 years in a row. I wouldn't be shocked if we did this in a month and we had a down October. I mean, I wouldn't be surprised. Wouldn't be surprised we're up either. But let's just be clear. But the reality is October is known for spectacular crashes. 1929. We got 74 in there. You got 2008 in there. More, but those are some of the big ones that we know about. And the reality is, then you look big picture. October's kind of average. Right? It's just kind of average right there in the middle. So it's not a good month, not a bad month. It is known for volatility, and it's no month that's had more 1% gains or losses in the month of October. Now, we just went all of September without a single 1% move. So this is extremely kind of boring. The other stat going around, I'm sure you guys have talked about, the VIX has been up 4 days in a row. S&P 500 has been up 4 days in a row. Never going back to 1990, have we seen 5 days in a row of stock market up and the VIX also higher? I think it's really a function of kind of the indecision over the government shutdown, getting people a little worked up, but nothing too concerning, because those other times happened in 95 and 96. Last I looked, 95, 96 did pretty darn well for investors. Clues, the fourth quarter. So fourth quarter is usually 80% of the time. Okay, it is. It's like 80% of the time. Actually, it's right in front of us there. 80% of the time, and what is that? About 4.2% on average. So when you look at a really good September, I looked at the top 15 Septembers of all time. This one was in there. The fourth quarter is only lower twice. So if you have a really strong September, the fourth quarter has only been lower twice. You can see October numbers there, kind of about average. Nothing stands out there. Another way to look at this is when the first 9 months are up double digits, which is pretty darn good. The rest of the year, the fourth quarter has been higher 20 out of 22 times. Again, pretty darn solid solid returns there. And actually, no, I've got my numbers mixed up, I guess. That's not 20 out of 22. But again, solid returns. You know what? The 20 out of 22 is coming up when the September it's a new high. Nonetheless, when you have a strong first 9 months, you tend to have a pretty solid end of year potential chase. And here's where I got my 20 out of 22. Sorry. When you hit an all-time high in September, like we just had 8 of them last month, the fourth quarter is higher 20 out of 22 times. And I just found this. I didn't do it yet. But if you had an all-time high in August and September, there's usually not that great months, never been lower. Okay. The fourth quarter has never been low. I think it's like 10 out of 10 or 11 out of 11. So just, again, some context to where we are. But again, a lot of these numbers say October might not be that great because we had a heck of a run. So if we have some October weakness, expect November, December to be solid. I think that's how we're looking to play this out. Just a couple more. I've shared this a couple times. I think it's really important, though. The F word, the Fed, when they cut near all-time highs within 2%, like they did a few weeks ago, higher a year later, 22 out of 22 times. Don't fight the Fed. It's just another thing we look at. And I do think the Fed is clearly in more of a dovish phase. It's some interviews yesterday, good discussions. The truth is we have a new leadership coming in the Fed in May. Who gets to pick the leader? The president. What's the president want? We all kind of know, lower interest rates. So again, if you look at what the dot plots say versus the Fed fund futures, kind of a mouthful on a Friday morning, it's looking for more cuts next year. And I think we will see more cuts next year than what the dot plot is saying. Because again, there's some new Fed leadership coming, maybe some new members potentially. So those things, think about just a couple more. When you go a long time, and a long time is 5 to 12 months without a cut. Remember, we cut last December, then we cut just last month. Again, you can see the returns there a year later, higher 10 out of 11 times with, what is that? Almost 13% average return. Almost, you're talking 400 basis points better than your average year on this particular one where you wait a while to cut. This is our proprietary LEI. Sonu Varghese, our team, puts this together. Is I think like 40 or 50 different components he looks at. No, I don't know them all. Can't give it away anyway. It's proprietary. What's the joke about Bernie Madoff? I can't talk about that. It's proprietary. I'm doing the same thing. Can't talk about that. It's proprietary. But this has been very accurate in terms of the economy. It never said there'd be a recession in late 22, early 23, half of 24, and everyone told us one was coming. And it's starting to accelerate. Look at the economic data we've seen the last couple of weeks. Starting to get a little better. I know the government shut down. We're not going to get as much data, but we think the economy is going to accelerate here going forward. Just quickly on this stuff. I mean, what leads a bull market? Profits. Profits continue to be very, very very strong. Record highs in earnings, new cycle highs in profit margins. I've called these the dual tailwinds to a bull market for 3 years now because profit margins going higher and earnings. That's not slowing down. I don't know when it's going to stop, but until we start to see that slow down, these again are tailwinds for a structural bull market. I could talk 30 minutes on this. I'm going to talk 30 seconds. The truth, households' balance sheets are in really good shape. Yes, it's because a lot of people own houses and a lot of people own stocks. If you don't, I'm fully aware that it is a different world out there. But the reality as a steward of assets, our job is to look at the world, subjectively, and we know who moves the needle. It's, again, the top 25, 30% of the economy, or the people that move the needle, really. Well, this shows household balance sheets. If you look at all the assets and all the liabilities, are in the best shape that they have been in 25 years. If the stock market pulled back 50%, sure, everybody'd be feeling it. And a lot of wealth that's been created would go away. If the housing market imploded, sure, I wouldn't be saying that. But the reality is, if things stay solid, balance sheets really are in a good shape. Just, I think, two more things real quickly.
Go.
1929 in the Wall Street Journal, a Black Swan manager guy I like, actually, talking about, of course, a Black Swan guy saying 1929, that's his job, right? I mean, that's what they do. Is there any correlation at all with the S&P 500 PE multiple relative to where it is 1 year later? I would say no. This shows the R squared is 0.00. That's called the correlation coefficient. It goes from -1 to +1. It's literally 0.00. There is no correlation whatsoever between, again, a PE multiple and where the stock market is a year later. Yes.
Wow.
You go out 5, if you go out 10 years, if you start higher, your returns are a little worse. But I'm a guy that's done this for a while. Now, you guys too. I remember in 2014, I was bullish at a different shop. Everybody talked about cape. The world is going to end. The new normal. Bill Gross is out there running around saying the cult of equity is dead. If you were a bull in 12, 13, 14, people hated you. Think they hate you now? Trust me. They hated you more back then because cape was high. So I've seen what the market's done the last 10 years, 11 years. When everyone told me cape was high in 2014, I'm not ignoring valuations. We do pay attention to them. But I'm just saying, if you look at the data, be careful getting in the valuation trap. This is a cool chart from Sonu. Last thing, it looks at S&P 500, last 5 years of 125%. People tell us it's a bubble. No, most of those gains have come from dividends, well, a little bit of it, and earnings. Okay, profit growth and dividends have been the great majority. Yes, there's been some multiple expansion because we're in a bull market, and you pay up for things in a bull market because you're feeling pretty good. Eventually, it'll pop. I get all that. Pop's a strong word. The music might stop, but we don't think we're there. We do not think we're there. This is being driven by the right things. All right, well, that's it. All right, guys. Well, I will take a break, I guess.
I gotta just say,
yeah.
That PE chart, just going back to that, was like, I've never seen that before, Ryan.
Yeah.
And I think that was like real eye-opening because there's so many people who will come in and say, like, it's the go-to metric. It seems like for everyone when they first dive in the stock market, it's like in Kramer's books and stuff. It's the first thing they pick up. Where is the PE? Let's look at the PE. Where is it? And I do it too. I do it too. I mean, we all do it, like, obviously, it's cool to talk about. It's fun to talk about. But I always like, okay, this thing's trading 100 times earnings like Tesla, or this is trading 5 times earnings like Ford. Well, it doesn't mean all of a sudden everybody's going to wake up the next day and say, Ford's cheap and Tesla's expensive. Right. We better correct this. Why is it going to just happen all of a sudden? So I think it's really eye-opening when you show me like a statistic like that there's absolutely zero correlation between PE and future stock price movement. It's shocking to me. But I think you're absolutely correct from a logical standpoint. It makes sense. Why is it like all of a sudden I analyzed it? I'm one of 6 million people analyzing the market, and everybody's going to realize all of a sudden tomorrow that Tesla's expensive and Ford is cheap. I mean, and stocks are expensive for a reason because it's got a really cool story.
Exactly. And, Dennis, so I shared that on Twitter maybe a week or two ago. It upset people. It caused a reaction, which honestly, for social media, you like a reaction because then more people see it and with the comments and the algorithms. But that went nuts. And I mean, again, it's the data. You can argue with it. I try not to argue with the data so much, but it's just something to think about. Now, the way we're looking at the world, right? We actually just crossed $6 billion in the money we run for our Carson advisors, all of the United States, almost 500 advisors. Yes, we have a slight overweight to technology. We like large caps over small caps. We don't think the Fed They're going to be cutting, yes. But, I think the economy is going to be a little bit stronger. I mean, we still think large caps are still that place to be. We have small cap exposure, absolutely. So if you say you like large caps, you have to like technology, right? And communication services. That's where the growth is coming from. They're a little pricey, but if someone's really worried about valuations, take out the Mag 7 and valuations are just fine, right? So if you don't want to invest in those large names, you don't have to. There's a lot of other areas. I came on with you all year saying, listen, look around the globe, look at developed international. We don't like EM as much, but EM started to do better. Clearly gold, we've liked gold for a while. Gold's doing great. I think gold is obviously very, very stretched here. But the reality is a lot of other places you can go if you don't like high valuations because they scare you. And again, for a while, I've always been told EM is cheap. EM is cheap. That's why you should own it. But for 10 years, it's underperformed, or 16 years, really. Now it's doing better now. But again, valuations are part of it. I mean, we like to look at, obviously, the fundamentals, the macro picture, technical sentiment, and then valuations. And we kind of put all that together, how we manage money and tell the stories that we do at the Carson Group. But yeah, valuation is fun to get people fired up on that one. I don't have a CFA, so I can do it, I guess.
Wait, Ryan, didn't you start with 8 billion?
No.
No.
No, what are we going to? No, we actually start. So I started with Carson 3.5 years ago, and we started what we call our Carson House View models exactly 3 years ago with 0 AUM. We are about to cross 50 billion total, which will put us as one of the largest RIAs, and we're growing. I don't know, I can probably say how much faster we're growing, but we're really growing fast, and it's neat because people trust what Sonu, myself, and our team are doing.
Yep.
Yeah, I'm the guy on TV talking about this stuff, but we manage real money. Like if you see what I'm talking about real money that we manage for our advisors and their clients, and we've had some really good performance. And
we know that. Yeah.
Few things are harder than managing money. I mean, you guys do it. You guys trade, right? I mean, like you could have a view like at 23, if you were bullish, if you weren't overweight large cap, you didn't do very well. I mean, that's the honest truth. You didn't have tech exposure in 23, Mag 7, you didn't do very well. This year, there is more dispersion. So it's a fun thing, very challenging, but when it's going good, you might as well enjoy it because you know it's not always going to be going good. Yeah.
Ryan, I got one question though.
Yeah.
Going back, I don't know if you want to go back to your interest rate slide. And from what I saw, it was the performance after the rates were cut after they started the cycle. What I think the only trepidation that some investors may have at this point is what's going to happen in 26. Okay, we're going to get 2 cuts this year, right? I don't think we're going to get 3, but isn't like the anticipation about 26? So I just want to get your take on that because if, what's factored into the market already.
Mm-hmm. Yeah, I mean, 26 is going to be interesting for a lot of reasons. We do likely have more cuts, we think, but we also have a new Fed chairperson, like I mentioned a little bit ago. We'll go back in history and look at what the market, and I do this, I'll do it more, but when the market has a new Fed chairperson, you know what the market tends to do? Or I'm sorry, when there is a new Fed chairperson, the market tends to test them, all right? Literally, Jerome Powell's first day was February 4, 2018. The Dow dropped 4.6% for the single worst one-day record ever, the first day of a Fed chairperson. Yes, that was when the trade war with China started. But again, the famous handoff, these about handoffs, right? Volcker handing off to Greenspan, August of 87. He probably knew this thing's crazy. I did a good job. Take it, kid. I'm out. And then we know what happened. So I wouldn't be shocked at all. And then midterm years historically aren't that great. 2022 was terrible, obviously, for investors because stocks and bonds did terrible and gold was flat. I mean, that was the terrible year for a diversified portfolio unless you're all in on energy in 22. So there's some things that have our attention. I will say this much though, when Sonu looks at things, the economy's still strong, right? The inflation, we do have some concerns. Services starting to creep up, goods inflation to creep up. But the truth, again, if the Fed's cutting when the economy's strong, that tends to juice things. And again, our job is not to try to say what's right, not to try to say what's wrong. It's just to go with the data. And we're kicking around the idea of how we see the next year. We're still overweight equities right now, right? And we're probably still going to be overweight equities in the next year. We were like 90% equities this time in 2023, 24. We started tilting down. We're maybe 61, 62% equities right now, with some gold exposure, with some managed futures, with some bonds. You have to have bonds, and we don't like bonds as much. We might up that is what I'm getting at, though. If we get a little bit of a pullback here sometime, we're still pretty optimistic. There's worries out there, but I just think, there's still more opportunity than not.
Okay. You guys know him is Ryan Detrick, CFO of Carson Group. We know him as Stat Man Do. Ryan, incredible presentation today, all the years you've been doing for us. And you're right. 6 weeks is too long. I can't believe that it's been 6 weeks since we got that information.
I
But
travel too much. I'm always
you,
you
no,
always
man,
invite me. I'm like, oh man,
you talk about
I'm all over the
great
place.
guests and like
Yeah.
easy people to communicate with. This guy is just top notch, Ryan. We really appreciate it, and I'm gonna get you on early November. I'm gonna do that right now. Thanks, Ryan.
Let's do it.
Awesome
All right. Have a good
stuff.
day, a good weekend, everybody. Enjoy some football, fall weather, Halloween season, spooky season. I'll see everybody soon. Take care. Thank you.
Right, we just had our major correction in the market. We went to unchanged. So, when are we going to start classifying a down day as a small up day? Right? Because we don't have any down days. We're on a 5-day winning streak. So, when we say that there's a pullback, it will be because the market only went up X amount. Are we at that point yet or not?
I don't know, Joel. This is like the song remains the same. Like you can have a million titles. Here, I'll give you I'll give you the titles for the show for the next month. The song remains the same. The story continues. Like you could just keep going and going because it's just buy the dip forever here, and I don't see why that changes. I don't see the catalyst. Like I'm struggling to find the short thesis. We can say stocks are overvalued, but Ryan just put a hole. He just shot a hole right through that whole thesis. The P's don't matter. It doesn't indicate anything about stock performance. So, Brentster, we're going to let you come on here. Sponsor us up here.
All right. I want to say thank you to thank you to sponsor of pre-market prep. That is Hive Digital Technologies, a global leader in green powered data centers for Bitcoin mining, high performance computing, and AI, operating with nearly 0.5 gigawatt of renewable energy. Hive is on track to capture 3% of the world's Bitcoin production by the end of this year. There is a QR code in the bottom right corner of the screen right now. You can scan that to learn more about Hive Digital Technologies. You can also click on the link in the description of this YouTube show. Thanks again to our sponsor, Hive Digital Technologies.
Stock's moving too.
All right, 8:57, and I think we got through about half of our outline here. So you know what that means. It's going to be a busy day on the Stock Trader Network. Dennis, and do we want to do any ratings? Is there anyone that's really catching your eye?
Yeah, there's a few here. Like we talked Apple. Obviously, we got to continue to talk Apple. To me, the story of the day with the downgrade to basically sell it from Jefferies here, and I'm going to keep focusing on NBIS as well. Johnson & Johnson caught an upgrade from Wells Fargo. We know the drug stocks have been moving higher. J&J kind of is like a drug, but it's also consumer products, so it's not going to get the kind of move that applies to it. It also doesn't have a PE of 10. Not the PEs matter anymore. We're going to stop talking PEs after I watch Ryan's slide there, but I mean, they're beaten down value names. Johnson & Johnson's not really a beaten down value name. It's a stock that's near all-time highs coming into this. So it's not really to be expected that it was going to have 10, 15% moves from here. But it's getting upgrade from Wells Fargo here today. Also, Instacart catching a downgrade from Piper here this morning. That stock was wild yesterday. I don't know, or 2 days ago, really got hit hard. And that was on the DoorDash news, I believe, and something else. I can't remember. Brentster would remember because he's got a better memory than me. But the thing that was hitting cart the other day.
Okay, so what we got an RCAT rating, and I just want to talk about the price action here in RCAT. This has been
we pitched this yesterday in the S10 room.
Really?
Oh, yeah, I talked about RCAT, and I said I really like the setup here at 1050. We're into 1150, 1237.
Huh. And okay, well, we are back over $12. There was one high at 1172. That was from yesterday, so that's a gap fill. That's 50 cents away. I don't know. I'm just going to give you this high from last week. This is what you want to see. September 23rd, you went to 1307. It was a big volume day. Not seeing much. Just make sure you hold a bid off the open with this trading up 83 cents at the current time. RCAT. Red Cat Holdings on the move.
Okay.
All right. That's it for today, folks. 9 o'clock. With big thanks to Ryan Detrick from the Carson Group joining us here today. Thanks to our chatters. Great input. We get information from you guys. We get information from our chat room and the STN room. We're going to hop over there. We're going to look at some imbalances here before the open. And it's a Friday. Market's supposed to make new highs on a Friday. We already did it. Let's get back up to that pre-market high. It's 67.8750, folks. Thanks for joining us on Pre-Market Prep.